Back in the action once again. It's about that time of day again here, folks. Time to get back to work. It's Thursday evening. It's August 29th, 2019. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, in case you're here for the first time, I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is to help you guys identify the best levels of support and resistance, identify the best entries and exits for tomorrow, and of course, identify some easy traps to avoid those losses tomorrow. And of course, we're prepping up here now for that Friday's trading session. We got a holiday weekend right around the corner here, and we have a lot to talk about in tonight's video. We got some oil. They're calling for a hurricane here coming this weekend. We'll talk about the oil here tonight. We'll talk about the S&P, Nasdaq, those big blasts higher, of course, and of course over on the euro and the gold tonight to wrap up this video. Got a lot to talk about tonight. Let's jump in first to the black gold. Like I said, they got a hurricane coming here that's going to probably make the Labor Day weekend a little bit wetter than normal. Let's jump into that black gold, that Texas tea, and let's see what this kind of pre-hurricane scenario is looking like here for the black gold, the crude oil futures. We can definitely tell here right now these bulls have control of this market. Market's been back and forth here this week. Bulls definitely have control with their 1, 2, 3 reversal. We obviously here can see, right, the bulls in control. The problem right now is we're right up around that measured move. We're right up around that overhead resistance we talked about in last night's newsletter. So, of course, I really don't want to buy up at these highs. I really don't want to buy up at these highs. I want to buy, but I want to buy nice and low. And I've identified, right, a couple key levels of support here for tomorrow that I'm looking to be a buyer at right now. So I'm looking for a buy setup. And really, I've got 3 different buy patterns. Depending on the type of pullback that we get, I'm going to dive into a lot more of those buy setups here in detail tonight on the video. Also, too, as we go higher here, if we do continue to go higher, we'll talk about some levels of targets I have overhead. And of course, we'll talk about how to avoid some of the most common traps here for tomorrow for all you oil traders out there. So make sure you stay tuned for more on the oil market. How about some S&P? S&P, that big blast higher, right? We heard from news overnight from China. Apparently, they're not going to retaliate on all of the tit-for-tat trade war. That, of course, sent the markets racing higher in the Asian session. Now, of course, we have that strong move up, that pullback, and that higher high. I'm going to draw a trend line off that high, mark up that low, and call this a spike in channel. And of course, I've got a bull market right now. I'm looking to be a buyer on this. Obviously, I want to buy the low of that channel. We also, of course, have a trading range here as well. We'll dig into a lot more details on this in the video tonight. But the bottom line is I'm looking to be a buyer here on the S&P. I want to see a nice deep pullback. Now, just talking about deep pullbacks here, if we do get a really deep pullback, because you know that big spike up here, we may see even more of a pullback here as well. So we'll talk about the shallow pullback. We'll talk about the deep pullback. We'll also talk about if this market keeps going higher here, because there is a block of resistance waiting there overhead. So we'll definitely talk a lot more detail about the S&P. Nasdaq is very similar here to the Emini right now. It is a bull market. Again, big blast higher there in the pre-market. Runs up, pulls back, double tops now. Now this is interesting because this is, it's a channel because it is a technical higher high there, but you'll notice it's barely, right? We're barely channeling here right now. In fact, I'm sure most people will probably look at this as a trading range. And of course, with this being a bull market into what feels like a range, right, that tells me exactly where I want to be buying here tomorrow. So I've definitely got my eyes on that deep pullback here on the Nasdaq. Looking like a range-bound market right now. Nice big bull bias. Everyone's going to be licking their chops trying to get in here right off of these lows. We'll talk about some specific entry patterns I'm looking for here tonight on that Nasdaq. What if it keeps going higher? Much like the S&P though, just like the S&P, we get a whole block of resistance up here. And so we'll talk about what I need to see as this market goes higher. We'll also talk about how to sell this thing, right, as it runs higher as well. So we'll cover the upside, the downside. We'll talk about some different scenarios I'm watching here for tomorrow. And then how about that gold? Boy, gold basically had a ping pong match, right, going back and forth here, right, today, early on gold, right, up, down, up, and then as you can see here, right, market gets spooked on the way lower here. So definitely seeing a bear market right now. There's no doubt about that, but I have to say, I don't trust this move at all. And there's a couple reasons why I don't trust this move. We're going to talk a lot more detail about that in tonight's video. But I know, I'm going to probably get a bunch of bad emails off this, right? But I don't trust this move at all. I have very little trust on this move. It's pretty much a straight move down, and you got that kind of slingshot back up here. I'm anticipating a run back higher here on the gold. In fact, it might just be the best move of the week here for us tomorrow morning. Obviously, with being such a bear market, though, there's one very specific pattern, right? One very specific pattern I'm looking for to be a buyer off of this. We're going to go into a lot more detail on this. We'll also talk about what it looks like to confirm a bear market too, right? So at what point will I give up on the buy and start looking for the sell? We'll talk about that, all details on that tonight on the gold. So I don't trust those bears on gold here. And of course, the euro, the euro just continues. The euro's painful right now. You can definitely tell it's the end of the summertime season. I was looking at the euro this morning going, is anybody out there right now? Boy, it was quiet out there this morning early, but I'll tell you, your patience paid off. We finally got that pop, right? Those buyer failures. We talked about this last night on the newsletter. Right now, the key is just wait for it to get above that moving average and just keep selling it back down again. It's slow, but hey, slow's not that bad as long as the patterns, keep working. So we're definitely bearish, and the strategy really doesn't change very much for tomorrow. We're trying to go up and sell it right back down again. I'm looking at, maybe we get a reversal, but highly doubt it right now. Looking at two different types of patterns here to sell off the high on this euro. It's a little bit slow. It's a little bit grindy here right now, but as long as we wait for those patterns, we're doing great on that euro this week. So stay tuned on the euro. We'll talk more about some specific entry patterns to watch for on the euro. We'll talk about up, down, and sideways, how to buy it, how to sell it, and when to do nothing at all. I've got everything lined up here, ready to go for tonight's video. Before we jump into the charts and get our hands dirty ahead of this Labor Day weekend, I want to remind you guys to make sure you join our mailing list. Now, you may not be aware of this, but just before I publish this video on our YouTube channel every evening, I send out an email to everybody on our mailing list. And that way, if you're on that list, you'll get the first crack at this nightly newsletter every time it goes live. And I want to make sure you get that email. So make sure you join our mailing list. I promise I never rent or spam that email list. I have barely enough time to do the good stuff, right? Let alone the spammy stuff, right? I don't know who has time for that anymore. I've got no time to waste your time or my time with spammy stuff. So, right, your email information is always safe with me, right? I'm not giving it away to anybody else besides sending you the good stuff every evening. All I need is your name, right? Your email address, excuse me. And then, of course, hit that subscribe now button. And don't forget, when you subscribe to our mailing list, you've still got to go in and check your email address, right? Check your email inbox, because I'm going to send you a welcome email with a verification link. So make sure when you join the mailing list, your job is not over yet. Check your email. Check for that verification link. I'm going to send you that welcome email with that verification link and a bunch of goodies so you can get the most out of our time together every night on this newsletter. So make sure you join our mailing list. And then before I jump into the video tonight, I have an important question to ask you down in the comment section below. And I always appreciate your time, right, leaving me comments below the video tonight. Question for you. If you could redo this over again, if you could go back and start again from the beginning, what lessons did you learn along the way? What mistakes would you avoid? And what would you do differently the next time around? Right? I know what I would do differently. I know a lot of things I would do differently. If I could get back in the time machine and go back in time almost 15 years ago and do this over again, I know what I would do differently. I know what I would avoid. I know exactly what I would focus my energy on, but I want to hear your feedback, right? In your mind, what's the biggest obstacle that you should have avoided when you were a rookie? Right? Or what's the most important thing you think is the most important thing to focus on, right, as a new trader? Or maybe you are a new trader. Maybe you're brand new to this beautiful business of day trading, right? No limit to income, trade wherever you want, no red tape, great business. Maybe you're brand new to this business, right? You're trying to hunt down your ticket to freedom as well through the business of day trading. What's the most important thing that I can teach you on this nightly newsletter? right? Drop me some comments in the comment section below. If you're an experienced trader like I am, if you could go back and turn back time, what would you do differently? Or maybe you are a brand new trader, like I'm sure a lot of you guys are, right? In your eyes, what's the biggest obstacle standing between you and becoming that confident and consistently profitable trader? Guys, drop me some comments in the comment section below. And while you're down there, do me a huge favor, will you? Hit that thumbs up button in the video tonight, because every time you hit that thumbs up button, YouTube rewards you, right, by helping me expose this video to more traders who can definitely, right, use this trading strategy as well. So again, do me a solid, hit that thumbs up button, right? That'll help me expose this video to more traders out there, and drop me that comment in the comment section below. And don't forget, if the comments aren't your thing, I'm always here, you know. You can always call me, call that toll-free phone number up in the upper right-hand corner. I always love being here with you guys, but I'll tell you, I really love when you guys call the office, ask me questions. You know, maybe you're wondering right now, who's the best broker? What's the best charting package? What data feed, right? What clearing firms are working best right now, right? Call that toll-free phone number. I can answer those questions on the phone with you. Or maybe your question is, how do I get access to the trade room on a free pass? How do I join your free trading course? Call that toll-free phone number, and I'd be happy to walk you through all the details of getting started, or any questions, right, that you may have along the way. All right, guys, always great to have you here with me on this video newsletter. But for now, let's get to work here, Joe. Enough of the chit-chat here, brother. Let's get some work done here. We get tomorrow, last day of the month, last day of the summer, last day of the week. You know what that means, right? That means volatility coming at you tomorrow. We have a very, well, I mean, not a unique situation. We just don't see these very often, but they're not as common as often. End of the week, end of the month, and really end of the summer season. You can expect a lot of people to be on vacation tomorrow. I would definitely expect the marks to be a little bit lower volume. With that lower volume, combine that with the fact that it's the end of the month and the end of the week. What happens at the end of the week? Desperation happens, right? Desperation happens. People who have lost a lot of money, they get desperate, right? They take Hail Mary trades, end of the week, end of the month. See, you might be an individual trader, but if you worked for a major trading firm, at the end of the month, your boss is going to come knocking and saying, hey, how was your performance? And so you'll be very tempted tomorrow, if you work for a trading firm that has numbers you haven't met yet this month, tomorrow's the day you got to make those numbers happen. You know what they say, right? Scared money is losing money. Desperate money. So be very careful tomorrow. Tomorrow is the end of the week, end of the month, end of the holiday season, at least for trading goes, right? We'll come back, of course, after the Labor Day weekend, and we'll start off the fall trading season. By the way, the fall trading season is historically the very best time of the year to be a trader, right? September, October, November, December, January, February, into the end of the first quarter. Okay, I'm warning you, right? Make sure you're ready here in the month of September. So we know tomorrow, end of the month, end of the week, low volume because of the holiday weekend. Remember, Monday's a holiday. Markets are open tomorrow, but they're going to be a very small window, right? I usually trade on Fridays no later than 10:45, 11 o'clock. Okay, tomorrow might even be a little bit earlier than that. So if it's not moving very quickly after 10:30, like we saw today, right? A lot of markets slowed down 10:30, 10:45 today. You're going to probably see a lot more of that tomorrow. Okay, it'll probably be a little bit more dramatic tomorrow. So just be careful, right? And as always, right, on a Friday morning, the later it gets, the fewer people are trading, the more desperate people get, and the more unpredictable the markets become, right? So early in, early out, that's the game for tomorrow. Now, as far as the news goes for tomorrow, we got that personal income number at 8:30. We do have the GDP in Canada tomorrow morning at 8:30 as well, right? And they pump a lot of oil up in Canada, right? So oil's definitely something to keep an eye on tomorrow around 8:30. We've also got that hurricane, right? Now, whether or not that hurricane is actually a hurricane, I can't recall if they've actually made it a hurricane yet or whatever, but everybody seems to be posting the cones all over the place, right? The radar screens, I see those everywhere right now. So everybody's kind of hoping for the hurricane, at least all the traders I know are. I'm not sure if I lived in South Florida, I'd be hoping for the hurricane. I'm sure they're pretty sick and tired of these weekly lead-ups to these hurricanes, right? It better be a real hurricane if you're going to ruin my Labor Day weekend. But in all seriousness, though, all kidding aside, that hurricane does play a big factor tomorrow. So definitely keeping my eyes on oil, right? Especially with that GDP number of Canada tomorrow morning at 8:30, personal income at 8:30. And that, of course, hopefully we'll get that nice big shot in the arm tomorrow morning, get some news, right? Get some setups before the morning gets too late. All right, guys? And don't forget, tonight we're going to go over our entire trading strategy, right? Every morning we trade the strategy together in our trade room, opening up at 8 o'clock Eastern time. All right, let's jump into those charts here. So now you guys know what to be careful about tomorrow. And again, tomorrow, kind of a half day tomorrow. And again, next Monday is a holiday, right? So no newsletter on Monday. Markets are closed on Monday, right? Nice little long weekend for you guys to rest up and refocus ahead of that fall season. Let's talk some oil. Speaking of hurricane, what is it? Dorian? Hurricane Dorian, right? Yep. Kind of a cool name there. Okay, hurricane crude oil here coming in. What do we know about oil right now? What do we know? We know we're bullish. Okay, that's for sure. We know that we have a trading range up here, right? We go up, down, double tops, double bottoms. So basically, you could say that the nuts and bolts right now, we are bullish into a trading range. Okay, that's the bottom line. That's the most important factor in this chart right now. Okay, so knowing that we're bullish into a trading range, I want to be a buyer. I just don't want to buy at the high of this range, right? Because obviously, if buyers were comfortable buying at that area, we wouldn't be in a range, right? We wouldn't. We would not be in a range if the buyers wanted to buy this high. Okay, so buyers have rejected the idea of buying high, and that's what creates this top. That's what creates this range. And you can definitely see the buyers are willing to buy low. You can certainly see that. And so it's definitely evident right now we're bullish, but we were running into some overhead resistance here, right, that we've got to be careful with. Okay, so what's the plan? The plan, first of all, anytime I have a range, I want to stay away from that middle, right? No trade zone right in the middle. Ranges tell me buy low, and they tell me sell high. Ranges tell me to buy low, and they tell me to sell high. Now, it's an overall bull market, right? So I want to buy low. So what are a couple buy setups that I can look for? Well, I always want to find a level of support. So the first thing I'll do is I'm going to use this range. The size of that range will determine, right, will help me find my buy zones below, right? I've got one right here and I've got one right there. And there's two of them there for a reason. Because the size of the pullback is going to directly determine what type of pattern that I use. So for example, let's say we get a relatively shallow pullback, right, down to this first buy zone down here. Okay, with that relatively shallow pullback, okay, that moving average will come over. And as that moving average comes over, you're going to see sellers, and they'll try to sell off that moving average, right? You can see the example right there, right? Not a very good red candle there, but you know that doji was red the whole entire time before it closed, right? So imagine now we run lower. The bears now try to sell off that moving average, and at that point now we know we're bullish. Right? I don't want to be a seller. I want to buy low down here. I don't want to sell down here. And so now once I see those sellers take that short off the moving average, now I know exactly where their pain is, right? Now I know where the pain point is. Now I know where, if the market goes higher, now I know exactly where all of those, we have to assume, rookie sellers, because professionals aren't selling that. Professionals are buying this, right? Because they understand how to read chart. They're professionals. So we assume only rookies are going to be taking that trade short at that point. And we know that rookies love to use tight stops. They'll keep their stops nice and tight because, they're trading on small trade accounts. We all start somewhere. Nothing wrong with that. But you got to have a tight stop to do that. And so, of course, we know where those stops are, and now I can buy right into that stop, right? It's called a failure pattern. Now, that failure pattern, right, as it's running higher here, I don't want to chase it. Because remember, I don't want to trade inside the no trade zone, right, inside the middle. So now what I'll do is I'll wait for that pullback here and wait to buy it on the pullback, right? A classic failure into pullback combination setup. And so this is the pattern I'm looking for as we get a shallow pullback. But what about a deeper pullback, Joe? What if it really pulls back? There's a couple things you want to think about, right, as it really pulls back. One would be a two-legged pullback. Let's say, for example, we make one leg, two leg down. I'm going to draw a trend line over it. And then I'll try to use that trend line on the opposite side, right? What do we call this? We call this, believe it or not, we call it a two-legged pullback. It's brilliant, right? Pretty clever. Yeah, two-legged pullback pattern. I had to laugh on that one. That was pretty good. So, right, two-legged pullback pattern. Again, the key to a two-legged pullback, just in case you haven't been here before, is to get some daylight in between the trend line and, right, it needs to go up and over and then in, right? So you want to make sure some daylight there between the trend line and the candlesticks, right? That's a two-legged pullback. Okay, those aren't as common as you might think. Okay, but what if it really dumps, right? What if the market really tumbles lower here? What if we really get a real deep pullback? We're still now within striking distance to be a buyer here, but now that momentum is pretty darn strong, right? So if the market really pushes lower on strength now, what do we have to worry about now? We have to worry about a lot more sellers, right? Remember, if I get a shallow pullback, I'm anticipating the rookie sellers with their tight stops, right? And I can buy into those stops. But if I see a real deep pullback now here's the problem. There's two types of sellers now. Now you're going to have the rookie sellers, but above those rookie sellers, right? You know what I mean? The rookies will sell the 23.6, the 38.2, right? You know, they get aggressive on it. Right above that, though, you'll see another round of sellers, right? These are the more experienced, the more conservative sellers. Okay, so this is an example where we're going to have to respect the momentum of that strong move. Let those sellers try twice now, the rookies and the more conservative sellers here now. And then once I see them commit, now I know once again where their pain point is, right? I'm looking to buy right into that pain point. Now remember, this could also be, right? This could also be a double dip. This could be a failure, right? We call this a nested failure, a failure into a pullback going higher, right? So that could easily be a nested failure into a pullback. As long as that pullback doesn't run back into the range, right? As long as that pullback isn't inside the range, right? Sometimes that pullback does this, right? Sometimes it goes up, and then by the time you get the pullback, right, it's right there. You don't want to take those pullbacks. Those ones are going to fail on you because you're inside the range again, right? So again, if I get a deep pullback, one try, two try, back up in from there, buying right into those stop losses. If it's a shallow pullback, just your straight failure pattern. Again, stay away from that middle. That might be the hardest part tomorrow, right? Since the Friday, summertime Friday, that could be the hardest part tomorrow. Now, as we go higher here, right? As we go higher here, first of all, where are we, right? Where are we here? How much space do I actually have overhead, right? Okay, perfect. We got plenty of space. 57.47 is that next high, right? So if this hurricane really starts blowing here overnight, you know, the National Weather Service, they try to scare the bejesus out of all of us, right? Don't even turn on the Weather Channel, by the way. The Weather Channel, you would think a world-ending storm is headed our way. So if you want to be scared half to death, turn the Weather Channel on. But let's say we actually do get some credible, right, some credible news regarding the weather tomorrow, and they're turning that tropical storm right into a hurricane. So we know that 74 will probably be pretty much a given, right? If this thing really escalates, okay, that 47, excuse me, I said 74. That 47 will probably be a given. So what are two patterns we could use for this? There's two patterns I like to use for a breakout. And I say breakout because it's a range. Okay, two patterns to watch for. First of all is the 1, 2, 3 breakout. This is the most conservative. This is the one I like the most, right? It's the 1, 2, 3. Starts off with a strong push up. Doesn't mean to be that strong, but you know, strong higher high, pull back to the moving average, and a jump off the moving average. That's the key. It's got to jump. It's got to really jump off that moving average. At that point, now I know we've successfully broken out. I'm going to mark up that high, mark up that high, mark up that low, and now I want to buy that pullback. Now that pullback pattern, okay, imagine if we zoom in on that area right here, right? That pullback pattern can also be a failure into pullback combination. This is a very common setup combination, as I mentioned earlier, right? So imagine now that moving average comes over, right? Kind of blow that area up right there for you. Failure pattern into pullback pattern as we go higher, right? But what if this thing really rips? What if it really rips higher here? Strong move up. What comes next? Strong move up. We call this the two-try breakout, or as I called it last night, right, the FOMO breakout pattern, right? The key here now is a very strong move higher. Once we get that real strong move higher, now profit taking is the first one, then sellers come in for the second one, okay? I am definitely concerned about buying too close to that high, so I would like to use a trap on that low, right? That traps will usually be your best bet, right, when you get that strong move up. You know, a good example was back here, right? Strong move up here, 1 try, 2 try, trap, and go, right? And that's exactly why we're looking to buy that trap low, right, this morning in the trade room, right? Strong move up, 1 try, 2 try, trap low. Same idea over here, okay? So strong move up, right? 1 try, 2 try, trap, and go. Target is, again, up to that 47. All right, guys? And if we do get to 47, I wouldn't be surprised if we see a range up here, right? Just keep in mind it may range out up there. If it goes into a range, same basic plan we talked about down here, right? If it ranges out, wait for the pullback, wait for the seller failure, buy into that seller failure. All right, guys? Now, speaking of failure patterns, I've talked about a couple different types of failures, right? 2-try failures, nested failures. We even talked about the 2-try breakout, the 2-legged pullback. So I'm going to move to the S&P now, but what I want to do is I want to give you a deeper dive into all of our favorite patterns here at School of Trade, especially if you're a brand new trader. I'd rather have you get a good foundation from me than to go out there and just lose money and get stressed out, and it's not easy to learn on your own. So what I want to do is I want to give you access to our free trading course, especially for all those new traders out there who really need a good foundation, because I'll tell you right now, I wish I would have had this trading course when I was a rookie. So grab that free course in the upper right-hand corner. I'll also put a big red button for it if you're on the blog here right now, right below the video tonight on the blog. Grab that free course, learn what I call the 3-step strategy. Right? Trust me, it'll change the way you look at the financial markets, and it will give you a good foundation to build on. The foundation, of course, will build on with us in the trade room every day, right, as a client of mine. So grab that free course, learn the 3-step strategy. You'll also learn my 4 favorite entry patterns right now, as well as see hundreds of examples of how we apply that strategy to our favorite futures markets. So definitely take me up on that offer. Grab that course in the upper right-hand corner. That way you've got a deeper dive into the strategy that we trade here at School of Trade. And so you kind of know what I'm talking about when you tune in every evening on this nightly newsletter. Okay, next up here on the S&P. S&P, and this has definitely been kind of the tone of the summer so far, right? We get these big blasts, right? These big blasts in the Asian session. It's either been a strong move up or a strong move down. This has been very, very common in the summertime season. And like I said, during the summertime markets, and especially overnight like this, it's very low volume, which means it can really explode, right? Higher or lower. And we saw that here this morning. Now, of course, this strong move up, right? This strong move up actually went into a tiny range here for a lot of the time today. It was a pendulum swing, right? And then back up we go. And then, of course, it went to another range, right? Finish the day here now with a range up around that 29.30 area. Now, you could just look at this and go, you know what? This is all that matters. You really could, right? I mean, we can literally ignore everything else. Everything else is pretty much irrelevant. All we care about right now is the fact that it's bullish, it's into a trading range. Now, we talked this before, right? What do we want here? It's bullish into a range. I want to avoid the middle, and I want to buy low, right? I want to buy low. Now, this is a really narrow range. And narrow ranges, which you probably know if you watch my newsletter every evening, but if you haven't heard this before, whenever a range is really narrow, it requires traders to get a much deeper pullback to get a decent risk-reward ratio. So what you want to remember is trading is a lot about psychology, right? The psychology of the market. Market psychology is a big part of my trading strategy. Putting myself in the shoes of traders on the other side of the market. And the bottom line is, when I have a narrow range, if I see a shallow pullback does not give me a very good risk-reward ratio, just because there isn't a lot of space inside that range. So whenever you see a narrow range, at least every time I see a narrow range, I immediately now think, okay, I've got to get a deep pullback, because a deep pullback is the only way for me to attract enough people to get excited about a trade off that low. So you can see here now what I've done is I've marked out my trading range. That trading range, of course, tells me where my buy zones are. But really, in all reality, I really want to get that pullback down to that 13, right? That 13 and a quarter to that 08 and a half area, right? That would really be the ideal scenario, right? I want to get that pullback as we pull back. Now, once we get that pullback, as you can imagine, right, we're going to start looking for a pattern like this. Just like that, right? Look for that strong breakdown. The moving average comes over. The sellers, what do? They try to sell off of that moving average. And of course, professional buyers are waiting right there to buy right into their stop losses. Okay, so don't let that pullback fool you. Wait for it to pull back to that moving average, right? Wait for it. Let those sellers sort of sell off of it. Okay, that tells you now where their pain points are, right? Now you know where pain starts to settle in, and now you know exactly where to buy, right into those stop losses, right? We're buying into those stops, and then of course, again, as long as we get the pullback in time, as long as we don't get this inside the range, right, we're buying that pullback. That's that failure into pullback combination, all right? Now, there's also potential we might have a much deeper pullback. Because when you look at the big picture on this, right, one thing that really stands out to me here is that we had this big run up, right, but we didn't really get a very deep pullback. It was a nice shallow pullback here, but I'm sure with this much of a blast higher, I would imagine there are a lot of buyers who are still waiting, right, to get that really deep pullback. So I definitely want to be aware of the scenario. I think a lot of U.S. session traders probably they woke up this morning and said, just give me something I can buy, right? Give me something I can buy on the cheap. And they weren't able to get it, right? Obviously, with this trading range this morning, right, we definitely knew below that range would be a good spot for it. But I'm sure there were a lot of people out there that didn't get in off that shallow pullback, and they're still waiting. And so if they can get another deep pullback here, I'll bet we're going to get even more buyers coming into this market. So imagine now we get that real deep pullback now, right? Now we're running into the base of this spike and channel, right? Remember, spike and channel patterns, we talked about this last night, right? Spike and channel patterns, was it last night or the night before? Yeah, day before. Spike and channel patterns love to give these big, deep pullbacks. Now, it doesn't feel like that's going to be the case right now, but it could easily be. Right? It definitely could. So we could easily, again, with low volume overnight, low volume summertime season, we may see that big dramatic pullback lower. And remember, if we go running lower here now as that moving average comes down, remember, you've got to give those sellers the benefit of the doubt. Right? It's not just going to be a bunch of rookies trying to sell this now. It's going to be a whole lot more. So let those rookies take the first swing, get that higher high, right? Right? Let those rookies get the first swing, get that higher high, the second swing there. Let them try once, let them try twice. Remember, higher highs there, right? And then I can be a buyer into that pain now, right? Into that pain point right above that high. Does that make sense, guys? Pretty simple idea, right? Shallow pullbacks, buy right into those failures. Deep pullbacks. Let them try once, let them try twice, then up we go from there. Okay, now you might be thinking right now, well, what would a reversal be then? How would this market turn bearish? First of all, it takes a strong move down. We're going to have to see a real strong bear move right now to set this table. Then moving average comes over. Sellers now have to hold that moving average and run it. Okay, be aware though, again, just because you see a strong move down does not necessarily mean it's a reversal, right? Look at that previous example. Okay, we see these all the time. When you've got a big blast overnight, big blast in the pre-market, buyers will be waiting to scoop up all those bargain prices. And so when we go lower here, just be careful, right? Don't try to be a hero and sell into that first pullback because not all of them are going to be successful. But if we do see it hold, if we do see that jump off the moving average, now what I'll do is mark up that low, mark up that low, mark up that high now, and we're selling off the high of that channel. Now, boy, if the bears can take control of this market tomorrow with that 1, 2, 3 reversal, where's their objective? Their objective is pretty much right back to that 28.85 area where we left off. I would imagine we left off on Wednesday evening. So we know we're looking for a pullback, right? Do we get that shallow pullback with that failure into pullback combination? Do we get that deep pullback with that 1, 2 nested failure back up? And again, that could also be a failure into pullback combination. I'm going to leave that out, right? That pullback will also be in play there too. Failure into pullback combination, that will work as well. Okay, don't forget, right, if we do sit here and go sideways, don't do anything there, sit on hands there. That's always going to be a little bit of a funny area there. Now, what if we go higher here? If we go higher, I've got some key levels overhead here that we got to be careful with, right? If you look up here, right, you'll notice a lot of tops up here, right? A lot of highs up here, right? A lot of highs up here, a lot of highs up here. So we definitely know, right? We've got some major levels over here. So the first things first is if I want to be a buyer as this market goes higher, right? If I want to be a buyer as that market goes higher, I'm going to have to see some strength, right, as we go higher. Let's talk about that, right? Now, there's really three scenarios, and this, of course, would also apply to crude oil as well, just in case you're curious, with this trading range. Okay, here are three things to consider. First of all, how could we sell high, right? Could I sell it? You can sell it, but you want to look for that nested failure pattern. So imagine now we jump up, right? Remember, we're bullish, but we're a range. So I don't want to buy that breakout. If I want to buy it, I need to get the 1, 2, 3 breakout, mark up that high, mark up that low, and buy that low, right? If we get the 1, 2, 3 breakout, I can buy that low, right? I'm not going to buy the first pullback, but I will gladly buy the second one. Or we get that strong run up, right? Real strong, and then 1 try, 2 try, and because we have concern about overhead resistance, my favorite pattern, whenever I'm worried about buying the middle of a range or I'm worried about buying into resistance, my favorite pattern now is that trap. Again, we call this a 2-try breakout, right? Last night we talked about them as the FOMO breakout, right? That fear of missing out. The key is waiting for that trap setup, right? That's the key. Okay, so those are the 2 buy patterns going higher. But what about the sell setup, right? How do we sell it? Well, first of all, we got that measured move overhead. So if we can get the run up, right, now I look for that nested. But since it's so bullish, I'm going to look for what I call a crown reversal. And that means looking for a 1 try for the buyers, pull back, 2 try for the buyers. And you'll notice a very specific part about this setup. Again, I call it a crown reversal because it kind of looks like a crown, right? Like a queen would wear or a king would wear, right? Whichever you want to choose. So we want to see that strong move up first. Okay, that sets the table here now at a level of resistance. We're up around the highs. If I'm going to even consider being a seller in a bull market, I've got to make sure I'm doing it at resistance. Okay, so I want to make sure I'm at the measured move. Then I want these buyers to try to buy that pullback, and they'll fail, right? They won't retest that high. Then I look for that lower low. The lower low is important because buyers want to buy lower, right? Just like sellers want to sell higher. I find that lower low. I wait for those buyers to try again. And now you'll notice it's a little trap. And the reason why I look for a trap high on that is because that's the safest place to be a seller. Because you're not going to get that many buyers up there. Only the rookies are buying up there. The pros aren't buying up there, right? The pros are buying down here. Right? The pros are buying low. So if I sell that trap, right, I usually have built in that first target, right? That first target back down there, right? So you usually get that little slingshot right back down again before you've got to worry about another round of buyers coming in, right, and bouncing you out. So that's why that trap is so important when you're going against the trend like this. Okay? So again, it's called a crown reversal. It's very similar to if we got that really deep pullback, that 1 try, that 2 try, and then up from there. The difference is this one's going with the trend, right? We're going with the overall trend. Make sense? Right? I can take that trade. I'm going with the overall trend. Okay? But if I want to go against the trend, now that same 1 try, 2 try, I really want that crown, right? I really want that crown. That crown is going to be a key part of that, right? That'll be your sell off of that high. All right, guys? So we got it pretty much covered here on the S&P. And again, as I mentioned earlier, right, I think I talked about this on oil here, but how do we reverse? What's the reverse look like, right? 1, 2, 3, yeah, right? So 1, 2, 3 reversal, and we're selling off that, right, high of that channel. I'm not a big fan of trying to predict reversals, right? I'm not a big fan of predicting reversals. I'm not trying to trade that first pullback. because that pullback a lot of times will fail and run right back up. All right, guys, good plan. The S&P, we're looking good. How about some Nasdaq? Nasdaq is very, very similar here to the S&P, but there's one really important detail here, and that is how flat this market is right now. That's how flat this market is. I realize it was very bullish beforehand, but remember before, right? Like I said earlier in the introduction, these are barely higher highs right there. Right? I mean, they're barely higher highs. It's barely a trend anymore. I mean, most people will probably look at this and say, nah, that's a range. That's a double top, right? There is your bottom. A lot of people will probably say, nah, man, that's your range, right? That's your range. Okay. So if that is, and again, it's a little bit of a channel. It's a bull bias, obviously, into what really could be seen as a range here. Now, this is a relatively wide range. Okay, that range is relatively wide compared to this little tiny range. Okay, and they actually kind of come together pretty nicely here. What does a narrow range tell me? And again, like the S&P, I can really structure the entire trade off of just this information right there. Right? It's a bull market up into a very narrow range. What do we know about narrow ranges? We usually get those deep pullbacks. Right? Why? Because they've got to get out of that range to get a good risk-reward ratio, right? For you to get a good risk-reward ratio, you've got to get that deep pullback. And so if we do get that, and again, relatively deep pullback, right? I want to see them move lower, get that moving average coming over, get those sellers now to try to sell off the moving average, right? So I can buy into their stops, and then hopefully get that pullback, right? Get that bull pullback, and buy as we go back up. Now you can see in previous examples, we don't always get that pullback pattern, right? Sometimes that pullback pattern doesn't happen until it's kind of too late, right? Like this one right here. You don't actually get the pullback until you're right back up to retest the high, right? So I wouldn't be too keen on the pullback, but that failure, absolutely, okay? Just be aware of that. Or if we really sink, right? If we really sink down, if we really sink, right, as we go, moving average comes over, right? Let those bears try once, let them try twice, and then up from there. So very, very similar there on that, right, on that S&P. You can already see buyers here as we open up in Asia. Okay, now again, if this is a larger range, right? Let's say this is a larger range. The larger range is another interesting characteristic, because if you think about what does a narrow range tell us? A narrow range tells us we have to get a very deep pullback because we need to free up space for good risk-reward ratio. A wide trading range doesn't have that problem. So you typically don't get very big breakouts, right, of a wide range. Make sense? Why? Because you don't need a big breakout. Okay? You can easily get a good risk-reward ratio even if you're kind of inside that range. Now, my rule of thumb is to always make sure I'm entering outside the range because that gives you the best bang for the buck, right? There won't be as many stop outs doing it that way. But you can see how this all comes together, right? We have a small range that says deep pullback to get a good risk-reward ratio. We also have a wider, and again, probably a wider range. That wider range says, no, I don't need a big breakout. I just got to get underneath the range, get those sellers to fail, right, and buy back up from there. So kind of interesting way that these are kind of overlaid, right, for these bulls. Now again, much like the S&P here, right, a 1, 2, 3 breakout will lead to a reversal and a breakout going lower. Get that 1, 2, 3. And again, remember, it's all about the jump off the moving average. Once we have that jump off the moving average, then I can look for that sell. Again, mark up that low, mark up that high, and there's your sweet spot right there. Okay, where's my target? Yeah, target's back down to retest those lows. Okay, give up all those gains from the overnight tonight. Okay, and then of course, as we go higher here, just like the S&P here, I've got a lot of concern about these levels overhead, right? There's a lot of frothiness overhead here. So if I want to be a buyer as we go higher, you know what I'm going to say, right? You got to have some momentum. We got to see some strength as this market runs higher here. So we know, get my chart back up here, right? We know that we've got a lot of resistance waiting here overhead. And it's very difficult ahead of time to know which of those levels are going to really hold. It is. You know, we might run into the first one and bounce, or we may go right through it and all the way up to the final one. It's very difficult to tell. So what you always want to do is you always want to make sure you get momentum, right? Now, the same three patterns, right? It's a 1, 2, 3 breakout. And keep in mind, guys, this is not drawn to scale. I'm just showing you the specific pattern I want to see as we go higher, right? So 1, 2, 3 breakout, mark up the high, mark up the low of that channel now, and now we know exactly where that channel will be. Okay, pretty easy. Yeah, simple pattern. The hardest part about that 1, 2, 3 breakout is just waiting for it, right? It always seems to take longer than we like to wait, doesn't it? Or it's that strong move, right? That's the key. It's got to be a whoa, big breakout higher, right? And with that big breakout higher, because I've got concern about overhead resistance up here, right? I'm looking for 1, I'm looking for 2, and again, sellers want to sell high, so you want a higher high, and then because I'm concerned about overhead resistance, I'm looking for a trap low. Okay, that's the key. You want sellers to sell high, and then get that trap low below it. That's the good stuff right there. All right, guys? So again, that's called a 2-try breakout pattern. And because we have a major area of resistance overhead, we look for that trap low as well. All right, guys? How about a reversal? What's a reversal look like? Well, again, because you're trying to go against the trend, you want that crown reversal. Up to the measured move. That's one thing I would definitely require on this. You want to see it up. You want it to almost overextend. Then buyers come back, they try to buy it once, lower low, try to buy it twice, trap high, and short that sucker right back down into that trading range. Okay, at this point now, your target on those will definitely be down around that area, right? Definitely down around the low of that larger range that we pointed out earlier. So Nasdaq's got a great setup here coming for tomorrow. Really, the only variable is how much we'll get tomorrow, with that Labor Day holiday weekend coming right around the corner. That's the only variable right now. So Nasdaq looking good. How about some gold? So we talked about gold earlier, and as I mentioned earlier, right, I just don't trust this move on gold right now. I don't trust it. There are a lot of reasons why. The biggest reason, for the most part, is because this is the lowest price we've seen in a week. And I just can't imagine you're not going to have a lot of buyers out there buying anything they can get their hands on here as soon as it pulls back. Remember, this may seem like forever ago, right? But we just came out of this huge run up. We got this big gap higher, right, down into this trading range. Okay, so this is a range for the most part, right? This is just one big range here. And where are we? We're below that range. Okay, what do we do with ranges? We buy low, we sell high, and we avoid the middle, right? So I want to buy this market right now. Well, I'd like to, right? I'd like to. Okay, another thing that's really interesting about this gold is the fact that, when we talked about this last night, we have that, right? We have that expanding triangle. Now, these expanding triangles, I've seen a lot of these in my career. What happens a lot of times is the market, when it runs, it'll come back and kind of hit the underbelly, right? We talked about the underbelly set up earlier this week. Hits the underbelly of that triangle, and if they can't hold, it'll just run right back up into that range from earlier on. So I'm kind of looking at this as, okay, we got to run underneath that triangle. I get it, right? But that was after we saw the market just bouncing around, right, this morning. And then it kind of took a nosedive down. I want to see improve it. I want to see improve it. It's the first time in a week we've had a nice big pullback. I think that alone will be enough to get the buyers excited about it. Again, we're below that big range from earlier on in the week or earlier on in the month. And then, of course, we have this final clue, right? The final clue is this kind of V bottom, if you will, right? We run down, we kind of chop around a range a little bit, we slingshot lower and then right back up. Now, these V bottoms have a tendency to really swing back in the opposite direction. That's probably why everybody bought it. So I like the buy side on it. What I don't like is how much bearishness we have in the short term. So what's the best way to buy in an overall bear market? You know the answer to this already. We talked about this just a moment ago. How do we sell the S&P? How do we sell the Nasdaq, right? How do we sell oil right now? We use a crown reversal pattern. And since I know this is an expanding triangle already, I'm going to mark up that trend line. I think that trend line is going to be a very important part of this. And really at this point, I'm looking for those bears to try once, those bears to try twice, give me that trap, right? And that run back up. Looking for that trap low. And there's a lot to like about this because, again, you're underneath the bigger range. There's a small little range right there. You'll be underneath the smaller range. You'll get the sellers here trying twice. Now, remember, this needs to be a higher high here. That's not very clear. That needs to be a higher high right there. Okay, that pattern's got to be a higher high there because you got to get those bears to try twice. Okay, once you get those bears trying twice, now you know that trap low. And again, you want to trap low because you're going against the trend, right? You want that trap low because you're going against the trend. You also want that trap low because it's protection against those sellers. And at the very least, you should really get a nice little quick target right up on the trend line. And then again, right, I'm trying to go back into that range. That's really where I want to go for tomorrow. Okay, now what if I'm wrong but right at the same time, right? What if this thing just takes off to the upside? Well then, unfortunately, I can't pick the bottom on it. I'm going to mark up that level, right? Mark up that high, mark up that high, mark up my channel now. Yeah, and buy off the low of that channel. And if I can get in off of off of that trend line too, man, that'd be great. Okay, not required, but that would definitely help, right? That would definitely help. Or if it really starts to run, right? Let's just say it takes off here to the upside. What's the pattern? Yeah, 1, 2, that FOMO breakout, right? That FOMO breakout. Now on gold, if this thing runs higher here, it'll be a short covering rally. So you're probably not going to need the trap, right? 1, 2, run up from there. Right? You probably won't need that trap because, as long as it's not, as long as that pattern isn't set up right inside the range, right, you're not going to have to worry a lot about overhead sellers because if it runs higher, that's going to basically be on the back of sellers getting the heck out, right? Short covering rallies, whenever you see a market that really tumbles and then reverses, it's called a short covering rally because the short sellers are covering their position. Right? They're buying back their position. Okay, the term covering, right? Buying back their position. And so as the market fires higher here, what's really happening is those aren't buyers buying, those are actually sellers buying. And so any shallow pullback, some buyers will jump all over it. So again, that'll be a 2-try breakout pattern, in this case, strong rush higher. Now, all this talk about being a buyer, what would a sell look like on this? Right? If you're shaking your head right now and saying, no way, man, why would you buy this market? Okay, what would a sell setup look like? It would be a basic failure pattern, right? You've got that trend line, coming down, and I would definitely look for the move up, buyers coming over, right? Buyers going to buy off that trend line and selling, right, into those stop losses, right? That'd be a buyer failure pattern. Now again, I'm looking for that pattern, but I'm hoping that I get it with a trap, right, and get it to fail on you. Okay, that's what I'm looking for here, right? But hey, if you disagree with me on this, it's perfectly acceptable, perfectly fine, right? That's kind of the nice thing about trading. We can all use different strategies, different opinions, and we can both be right. There are lots of times in my trade room where, right, I go short, right? Somebody else goes long, and you both make money. Right? That's kind of the beautiful thing about trading. It's also the hard part about trading, right? One of the hardest parts about trading is that 2 + 2 is not always 4, right? You know what I mean? One of the nice things about a lot of businesses is that it's always black and white. You see this happens. You see that happens. With trading, it's not always the case, right? Because trading's about probabilities. It's the coin toss theory, right? You can't predict the coin toss unless you toss the coin hundreds of times. Right? It's all about, again, think of the coin toss theory, right? You can't predict success on every single trade, but if you take a big group of trades, they'll be successful over a long period of time, right? The law of large numbers, the coin toss theory. We talk about all this stuff inside of our beginner classes, by the way, to get your head on straight so you know what to expect as a professional trader in my trade room. So again, if you want to be a seller, that's your sell pattern. Now, what would convince me to be a seller? What would convince me to be a seller is if we come up, retest, and keep going. That would convince me, right? So if we pull back, we run lower, and we keep going, that would convince me. It would. Okay, and what we look for in that point. If we run up and we go lower and keep going, look for this as a spike in channel. Okay, look for that as a spike in channel. What do spike in channels tell me? Sell the base of that channel, right? Up, buyer failure, seller pullback, and down we go again. Okay, we've talked about this. We haven't talked about this to the sell side yet. So if I'm wrong about this and this thing shoots lower here, okay, keep your eyes open for a spike in channel. It'll channel out down here. Once you have that channel going, okay, now mark up the base of that channel. It's going to be a pop-up, buyer failure, into seller pullback, and down we go from there. All right, buyer failure, seller pullback, down from there. Where's my next target? Next target is at that 15.15. Okay, the 15.15 levels the pendulum swing off that big range. Okay, 15.15, right? That's going to be your magic number for the short side here tomorrow. Okay, and if we keep going, get that 1500, right? If we keep going, 1500, but I don't think it's going to have enough juice for that. Maybe, but I would imagine that 15.15 area though is going to be a tasty level of support for those sellers. So that's my strategy now for the gold. You get the bull side, the bear side. Let's wrap this up here now with that mighty euro. Over on the euro tonight. Euro, of course, as I said earlier in the introduction, low volume, choppy, sloppy, right? Not exactly the prettiest market to be trading right now. But as I mentioned earlier on in the week, if this thing just keeps on grinding lower, every time it pops above that moving average, just sell it right back down again. That's all you really do right now. I don't want to sell low. Wait for the pop up. Buyers try to buy it. They fail. Keep going lower. Wait for the pop up. Buyers try to buy it. They fail. Keep it going lower. Price pops up. Buyers try to buy it. They fail. Right? Keeps going lower. So all I'm doing right now on this euro is I'm just waiting for these pops off the low and then trying to fade them right back in again. Right? So we go up. Buyers come in. Buyers try to buy off that pullback. We know where their stops are. We're selling into stops. We're selling on that pullback, right, to retest that low. Now, of course, it's a bear market, so I'm trying to find levels of resistance. I've got this old trading range in here. That will be a level of resistance to use. I've got my lower low up to those highs. That's going to be a level to use. All right. And, again, think of it this way. If we see a relatively shallow pullback, all right, up to the high of that channel, it's that buyer failure into that pullback and back down. Okay. Or if we run, right, really run up now, again, we haven't held the pullback yet, right? It's not a reversal yet, but now we get a really big pullback up now. It's a 1, a 2, and then go from there. All right. If it's a modest pullback, it's a failure pattern. If it's a really strong pullback, right, just let those buyers try a couple times and then we can sell right into those stops. All right, guys, what would a reversal look like? A reversal will be that 1, 2, 3 reversal. Remember, it's got to come off the moving average. Don't be so aggressive buying that first pullback here because a lot of times they're going to fail. Mark up that high, mark up that high, mark up that low. Now we know where our next channel is, and now we can buy that channel low, right? Don't forget, we may go sideways here. If we do go sideways, mark up your range. Use that range to find a new battle zone. Okay, we'll do that obviously together in the trade room. We go up, moving average comes over, buyers try to buy it, and again, same thing. Just waiting for it to pop up, waiting for those buyers to try buying the pullback, and we're selling right into that failure. If it keeps going lower, right? If we keep grinding lower, same thing, right? Same thing. Mark up the base, wait for the pop, wait for the buyers to try. You got it, right? Insert, sell into stops, and of course, sell that pullback for the move down. All right, guys. Now, again, I have drawn all of this stuff up on the chart, but I want to remind you, grab that free course in the upper right-hand corner, right? Use that big red button right below the video tonight on the blog, right? And grab that free course and learn the three-step strategy. See hundreds of different examples of how we use that strategy, right, every morning in our trade room. And speaking of trade room, don't forget, guys, we get together every morning, 8 o'clock Eastern time, and we trade the strategy together. The strategy is really simple. 3 steps to success. You'll learn it as part of our free trading class. The patterns are easy. What's not so easy, though, is sometimes the markets are really fussy, right? Sometimes they're choppy. Sometimes they're beautiful, but sometimes they make you wait a long time. Sometimes they move real fast. The hard part is applying it to a moving market. And that's why our trade room is such a big advantage for all of our clients. So come out and join me every morning in our trade room. We open up at 8 o'clock Eastern time. To get registered, just look right below my ugly mug tonight. Hit that advanced course. The advanced course includes your beginner, intermediate, and advanced classes, all the trading sessions, all the ongoing support, all the tools. There's a video right there on the homepage for you. Watch the video, learn more about membership. And if you're not ready yet to be a member, please don't forget, grab that free trial, right to the left of me here tonight on the website. Again, there's a big red button below the video tonight on the blog right now. Grab that free trial. The free trial includes your free trading course, a free pass to our trade room, hundreds of examples of how we apply this strategy to our favorite markets, and a lot of hidden benefits, right, or hidden bonuses inside that free trial. So enjoy the free trial, right, or come out and see us soon as a client and join us in the trade room. In the meantime, guys, be careful tomorrow. Early in, early out. If you're traveling for the weekend, safe travels. Come back with all your fingers and toes. If you're in the cone of Dorian, right, stay safe, stay warm, stay dry. I'll be thinking about you guys here while I'm celebrating by the beach here for Labor Day weekend. No newsletter on Monday. Again, markets closed on Monday. There may be some markets open somewhere out there around this world. Be very careful trading on Monday. And again, tomorrow, early in, early out. That does it for me, guys. Congratulations. You survived the summertime season. It's not an easy season, right? It can be jumpy. It can be inconsistent. We're going into the good stuff here. We'll see you guys next week on the next edition of our nightly newsletter, welcoming in the fall trading season. And I'll tell you who couldn't be happier, right? This guy right here, absolutely. I think traders are the only people on the planet that are excited for Labor Day to get these price action back on track, right, and get this fall season going here. That's it for me for now, though. Thank you so much for being here. Keep in touch. Call me if you guys have any questions. Use that live support tool, and we'll see you guys in the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other this weekend, will ya? And be here next time. Adios, amigos. Bye-bye for now.